What if I told you there's one stock that could potentially 10x your money in the next 24 months, and earnings in just days could be the catalyst that changes everything? Stay with me, because by the end of this video, you'll understand why I'm going all in on PLTR before these earnings drop. Hey everyone, Smart Stock Sam here, and today we're diving deep into PLTR stock. I'm going all in before earnings, and here's exactly why you need to watch this ASAP. If you're serious about building wealth in the AI revolution, smash that like button and subscribe, because this could be the most important investment decision you make this year. Most investors still think Palantir is just some secretive government contractor playing with data in the shadows. But here's what Wall Street insiders know, and retail investors are just starting to wake up to. Palantir isn't just participating in the AI revolution, they're becoming the actual operating system that runs it. While everyone's chasing the next shiny AI stock, Palantir has quietly positioned itself as the central nervous system of the entire global economy. And the numbers? They're absolutely insane. Let me break down the transformation that's happening right now. Palantir has delivered 9 consecutive quarters of GAAP profitability, but that's not even the crazy part. In software, we use something called the Rule of 40, where you add revenue growth plus profit margin, and if you hit 40, you're doing great. Palantir, they're at 114%. That's not a typo. They're literally rewriting the rules. And get this, they're sitting on $6 billion in cash with zero debt. In an environment where companies are drowning in interest payments, Palantir has the ultimate war chest to dominate. But here's where it gets really interesting, and this is what most analysts are completely missing. Palantir has cracked the code that makes them virtually impossible to replace once they're in. They call it the Ontology Layer, and it's basically a digital twin of your entire operation. Their engineers don't just install software and walk away. They go deep into the belly of the beast, mapping every asset, every process, every decision point into one unified intelligence model. Once that's embedded, ripping out Palantir would be like trying to remove your nervous system and expecting to still function. The switching costs are astronomical, and that's exactly why their customer retention is through the roof. Now let's talk about their dual-engine growth model, because this is where the magic really happens. Engine number 1 is their government business. Think of this as the defensive floor, the stability anchor. We're talking about massive contracts like a $10 billion framework with the US Army. This provides predictable, sovereign-level AI revenue that isn't going anywhere. But engine number 2? That's where the fireworks are. Their US commercial business just grew 121% year over year and is now actually outpacing their government revenue. Let that sink in. The rocket ship that was supposed to be their side hustle is now becoming their primary growth driver. Major companies like Tyson Foods, Hyundai, and BP are signing on because they've realized something crucial. In the age of agentic AI, where artificial intelligence can actually execute tasks autonomously, you need Palantir's infrastructure layer, or you're going to get left behind. Some analysts are projecting that this agentic AI wave could drive Palantir's revenue growth to 70 or even 80% by 2026. And here's the kicker. We're just at the beginning of this adoption curve. Let me give you the actual numbers for 2025 because this is where rubber meets road. Revenue is projected to hit around $4.4 billion, which represents 53% growth. Their gross margins are sitting at a beautiful 83.8%, which means they're printing money on every dollar of revenue. Their remaining performance obligations, which is basically contracted future revenue, is up 65% to $2.6 billion. But, and this is critical, the stock is currently priced for perfection. Any stumble in Q4 earnings could trigger some serious volatility, and that's actually where the opportunity lies. Here's what the smart money is doing right now, and why I'm positioning for a major move. The technical setup is what traders call a coiled spring. The stock recently broke below key moving averages and is hovering around the $143 level. We're seeing major bearish positioning in the options market with heavy put selling at the 140 strike. Translation? Big institutions are planting their flags, saying, "We'll buy aggressively if this drops to 140." We've got macro headwinds with Fed uncertainty and potential government shutdown risks creating fear. But here's the play. If we get a pre-earnings dip into the 130s, that could be your once-in-a-year entry point for a move back to $170 or even $180. Let me show you why the risk-reward here is so compelling. CEO Alex Karp is playing 4D chess while everyone else is playing checkers. The guy saw this AI infrastructure play coming years ago. Major Wall Street firms have price targets that'll blow your mind. Citi has Palantir at $235. Wedbush is even more aggressive at $255, calling it the foundational AI layer of the future. Even with conservative estimates, we're looking at 60 to 80% upside from current levels. Here's my personal strategy, and you can adapt this to your own risk tolerance. I'm using dollar cost averaging in the $125 to $145 range, but keeping position size at 5 to 10% of my portfolio max. Yes, I'm bullish, but I'm not reckless. This is a high beta stock that can swing violently, so position sizing is crucial. For those waiting on the sidelines, my trigger zones are 138 for a half position and 130 for going heavier. And if earnings surprise to the upside and we gap up, I'm holding long-term because the infrastructure story is just getting started. So here's the final verdict after all this analysis. Palantir is no longer a speculative bet on some future AI fantasy. They are actively rewiring how the global economy operates, contract by contract, customer by customer. The trade-off is crystal clear. You might have to stomach some short-term macro pain and volatility in exchange for positioning yourself in what could become the most essential infrastructure company of the next decade. The companies that won the last era built the cloud. The company that wins this era will build the intelligence layer on top of it. And right now, Palantir is in pole position. My closing thought? Treat any pre-earnings weakness as a gift. The market is giving you a chance to get in before the narrative fully shifts. Palantir isn't just riding the AI wave, they're building the entire ocean. And that, my friends, is why I'm going all in before these earnings. If this analysis helped you see the opportunity clearly, hit that like button, subscribe to Smart Stock Sam, and drop a comment letting me know if you're buying the dip or waiting on the sidelines. Let's build wealth together. I'll see you in the next one.